If you think investing is too complicated, expensive, or only for people in suits on Wall Street, think again. We're talking about robo investing, specifically Schwab's intelligent portfolios, and how it can be the easiest way for you to start growing your money, as well as a sneak peek into how you can start funding it. Now, before we get started, let me introduce myself. I'm Terry M. Lee, and welcome to my channel, Simple Step Investing, that's about how we can take simple steps to invest in the stock market. Before we get started, remember there are always risks involved with investing, so do your own research. I am not a financial advisor, and everything here is for educational purposes. I'm sharing with you what I'm doing to build accounts for myself and my niece, otherwise known as Auntie's Angel. So let's get started. Today we're going to discuss what is robo-investing, why I chose Charles Schwab, and a demo on how you can get started too. Let's break it down. So what is robo-investing? Basically, it's like having a financial advisor, but it's software. A robo-advisor uses algorithms to create and manage an investment portfolio for you. That means no picking of individual stocks, no stressing about the market every day, and no high fees for advice. Instead of you having to know all the details, the robo-advisor builds a plan based on your goals, timeline, and risk tolerance. Now let's talk about Schwab's version, Schwab's intelligent portfolio. What makes it different? Reason number one is no advisory fees. Yep, you heard that right. No advisory fees. While most robo-advisors charge 0.25% or more annually, Schwab does it for free. They make their money through other services, which we'll touch upon later. Reason number two, automated and diversified. Schwab spreads your money across various types of investments, such as stocks, bonds, real estate, even cash, and based upon your answers to a quick questionnaire, which I will demonstrate later. Then it automatically rebalances your account to stay on track. Reason number three, it's goal-based investing. You can invest for retirement, a vacation, or just general savings. Schwab tailors their portfolio to match your timeline and your goals. Reason number four, support. When you need assistance, the ability to reach an actual person via chat or telephone can make or break your experience. I cannot stress how important it has been to reach a person to answer my questions, even when I've contacted Schwab on a Friday night. Now, let me give a quick demo of how everything works. Schwab has a couple types of investing with tax advantage accounts, meaning you're going to use a Roth or traditional IRA, but you can also use these in regular taxable accounts. We are going to focus on this one here. This one with a wealth advisory is not for free. So what I'm going to do is I am going to quickly go through the wizard so that you can see how the process works. It asks a few questions. You can take your time and start your goal. You don't have to actually put in any money, but you can use the wizard to gauge where you are and what your investment journey might be. So I did this as if I was doing this for my niece, and I implemented things accordingly. So in this example, let's say we started with $5,000, and I said she had 40 years before she might need this particular money. And let's say we didn't make any investments since then. What $5,000 after 40 years, and let's select our risk threshold here. So let's say we could be a little bit on the riskier side, or our risk tolerance was a little bit higher, that we could gain this much, but we could lose this much from a year from now. And so this would turn into about $65,000 after 40 years of $5,000, making absolutely no deposits to this money. But what would happen if we could put in $50 for the next 40 years? $64,000, or that original $5,000 turns into $182 versus the 65. basically $65,000. What if we did even $100? And you could go on and do this, so on and so forth. Now, what if we made, instead of $100, we did $1,000 a month for the next 40 years? Let's see what that turns into. Almost $2.5 million. Whoa, baby. As you can see, robo investing and using the wizard can be a very powerful tool to reach your goals and to gauge where you are in your journey. Now, before I continue with the second demo and how we can fund our goals, if you have found any of this information valuable, please take a moment to subscribe to the channel so you are notified about future videos and hit that like button. Okay, let's get back to the nitty-gritty. Before we take a look at the details of funding our plan, I want to stress that even though you may not be able to add money monthly, maybe you inject money quarterly or some one-offs, like a work bonus. If you have already been asking, how can you generate an extra $1,000 a month? Well, I'm glad you asked. I'm going to show you the strategy that I'm implementing for myself and my niece, who does not want to sit and look at the charts all day. I'm calling it my personal ATM system by using leaps. In a future video, I will explain all the details, but by purchasing leaps, especially 1 or 2 year option contracts, we can use the gains to fund our account. The primary reason for using leaps are they require less money than purchasing 100 shares of a stock, and 2, you can be less right. So imagine that you've purchased at the highest point that the stock has reached so far, but you needed the return or the gains or possible gains next week. In short, you'd probably lose some money, but if you did that same purchase and had 2 years for it to go up, you have a higher probability of reaching most of your goals, even though nothing is guaranteed. The same is true for leaps, but let me stress, we are not buying willy-nilly, and there will be more about the ATM system in a future video. For now, let's focus on the gist, which is to purchase long-term option contracts or leaps in a different but like account, move some of the gains to the intelligent portfolio that's doing all the auto balancing and investing for us, and then rinse and repeat the system. The like account is key, as there are limits to the amount of money that you can contribute to Roth and traditional IRAs. However, you can move money between like traditional IRA accounts that don't count towards your limits. I know what you're thinking. Show me the money. The next few screenshots are from back testing using Schwab's on-demand feature on their Thinkorswim trading platform. These purchases were made back in 2023 and exited at a later point. So in my first example, I'm using Walmart that was purchased sometime in 2023. The cost of this particular leap contract was $1,910, and I held it for 344 days. It would have even been longer, but Walmart had a split in 2024, and the back testing, the on-demand feature, doesn't calculate or do the splits properly. So I did it in 2 different trades just to show you. So what ended up happening, I bought this one contract, which is equivalent to approximately 100 shares, and it cost basically about $1,900, and it had a 91% gain just before this split for a of $1,750, almost doubling or the 100% for this particular trade. Not bad for investing that money. So the second part of the trade was I ended up just purchasing one contract again after that. And then this screenshot was taken as of May 15th of 2025, just about a week ago from this recording, and it was up 425% for a gain of over 3,000. Now, the next one that I want to show is for SoFi. SoFi doesn't move like Walmart. Every stock moves differently. Now, this one was purchased for $243, much lower capital required. And this one was only held 53 days and it had a gain of 264%. Now, every stock moves differently, stock and ETF, but I just want you to sort of get an idea of what could be possible. Now, this next one is definitely a big one. This is Eli Lilly, which is, in my opinion, right now an expensive stock, even as of this recording, but it has a lot of momentum. A lot of people traded it, really moves. So now this cost was over $6,000, $6,700. Look at the gains. 833% for a $55,000 gain, just a little bit over 6 months. Now, while this is not necessarily typical, think about this. This $55,000, if we were only shooting for $1,000 a month, this exceeds this by almost 4 or 5 times for 5 years. Let's say we took $36,000 of it, injected that into our portfolio, our personal ATM machine, and then we left the rest of the money to reinvest and do some more leaps. That's how we can start small and keep building our personal ATM. To sum it up, Schwab Intelligent Portfolios is a legit beginner-friendly robo-advisor with no advisory fees and automatic investing. If you don't have the $5,000 to get started but want to learn how to build your own ATM, check out the links below to join our soon-to-be open community. If you're ready to get started, use my link below to open up your Schwab account and start funding it. If you like this breakdown and want more beginner-friendly finance tips, hit that like button, subscribe, and let me know in the comments what you want me to cover next. Until next time, invest smart, live well.